The previous trading day was quite volatile. The focus of market participants was on ECB President Christine Lagarde's speech. She said that the regulator would stick to its aggressive rate hike path aimed at combating high inflation. Lagarde also noted a decline in natural gas prices amid a milder than expected winter in Europe allows the regulator to keep monetary policy tight in order to bring inflation back to its 2% target. This statement supported the euro in early trade. However, the dollar managed to recoup losses amid strong data from the United States released later. US weekly jobless claims declined. Statistics on housing starts and building permits turned out to be upbeat. The Philadelphia Federal Reserve's monthly manufacturing index also recovered. Against this background, the euro came under pressure, but after a while, demand for the European currency rebounded, pushing the quotes back to the sideways range. As for the British pound, yesterday's trade was rather calm. The pound sterling spent almost the whole day around 1.2338, but then gained strength and advanced to the one-month high. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on UK retail sales, which are expected to rise to 0.5% month-on-month in December and decline by 4.1% on an annual basis. This report may lead to a slightly rally in the British pound. If the figures disappoint investors, the pound sterling will go down. In addition, Germany is set to release data on producer prices. However, this report is unlikely to have a severe impact on the euro's behavior. Traders may also take notice of another speech by ECB President Christine Lagarde as well as Fed members' statements. US existing home sales will be in the focus of investors. The indicator is anticipated to slump in December. This may add to pressure on the greenback and result in its extended losses against the euro and the British pound. And now let's move on to technical analysis. According to the 1-hour euro-American dollar chart, it is worth focusing on the level of 1.0817, acting as the middle of the channel, and 1.0866 its upper boundary. A decline followed by a false breakout at 1.0817 will create a strong buy signal. In this case, the euro will most likely rise to 1.0866 and probably 1.0883. In this area, it will be possible to open short positions amid a false breakout, counting on a return to 1.0817 by late trade. Alternatively, if the price breaks through 1.0817 and tests it from the bottom up, a sell signal will be generated. The euro will slide to 1.0769, where I recommend going long on a rebound with a view to catching an intraday correction of 25-30 pips. Short positions against the trend on a rebound will be relevant only at 1.0931. Likewise, in this case, one can count on a correction of 25-30 pips. Speaking of the British pound, the best way to make a profit is to go short amid a false breakout at 1.2431, this month's high. Long positions can be considered only after the pound sterling falls to 1.2338 and forms a false breakout. In addition, going long will be relevant on a rebound at 1.2257 with a view to catching an intraday correction of 40 to 45 pips. In case of bulls subdued trading activity at 1.2431, traders are recommended to put off entering the market with short positions on a rebound until the price reaches the 1.2516 mark. After all, the situation is risky. A wave of strike action gripping the UK may force Prime Minister Rishi Sunak to make a number of political decisions, which in turn may affect the pound sterling. Good luck and have a great weekend.